Happy Monday, everyone. Hope you're having a good Monday. If you're not having a good Monday, I'm throwing some positive vibes at you over the internet. All right, do you feel it? Now you're going to have a good rest of your Monday. No need to thank me. It's my job. What you're looking at here is the full spectrum of rates. If you've never seen one of my reports, the lowest rate here you've got is this 3.75, and the highest here is 6.75. This varies a little bit. You might see this peak up to 6.875 and this go drop down to 3.625, but that really doesn't matter now. On the extreme end here, these this has the most points here. This is for somebody who's going to be living in there very much long term, because long term those points will save the most money. This is like maybe for a short-term investor here, because this is the one. Rates like this is where you'll get no points, no cost, no title, no escrow, and a big old credit left over to pay for other things. This is a good one for like short-term people, flippers, etc. These rates are available at every bank, every brokerage, every lender, every credit union in the country. All of these rates. The different institutions choose to advertise what they want to. They want to advertise the rates that are going to appeal to the most people. So you're going to see them advertising right in this range, right in here as of late. You'll see them advertising mostly probably right in here. You might see a few dip up here, because in this range, this is where all of the 0 points and the 0 points and zero cost rates reside right in there. So this is what you're going to see advertised, and probably why you're not going to see stuff way down here or stuff way up here. Let's go ahead and jump into the report. The indicators, I'm going to just go over really quick first, and then we'll hop into the rates. Don't just look at those rates and bounce, because I need to explain something to you. So hold your horses and give me a second to put in my laser pointer back on. All right, so now we have the laser beam. Check this out. Single family residence and condominium median sold prices here in California down as expected. You'll typically see the mortgage rate pricing here dropping down along with these median sold prices. Next indicator, mortgage-backed securities. There's many that you can follow. I'm just following this one. You can see it up, which is right in line with what's going on. There's an inverse relationship between these and the mortgage rates. So when these are going up, you'll typically see mortgage rate pricing going down. The 10-year Treasury, on the other hand, tracked right along with the rates. When you see the 10-year Treasury going down, you'll typically see the mortgage rates going down. The 10-year Treasury bobbles up and down constantly, but overall it's on a downward trend. And finally, the new housing starts. This is down. When you see this trending down, you'll typically see mortgage rate pricing trending down. That's why I have chosen these indicators to go along with the rates. All right, now let's go on over to the rates. Now, these are rates that I personally shopped out. These are only about 15 minutes ago. Now, I have been shopping. I shop lenders and banks and brokerages and credit unions of all sizes every week. Now, the difference between me shopping it and just someone else shopping it, I've been doing this retail mortgages for 24 years. I'm a licensed broker and licensed mortgage loan originator. This is what I do for a living. So whereas these places can fool a lot of consumers with tricky advertising and rates that are packed with fees that you might not realize are in there, they sure as hell aren't going to fool me. So what I've done for you is out of all these places, I can't shop every single one of them because, there's thousands out there, but I've shopped out the most competitive ones that are the most reliable. Like, they're not just advertising low crap that they're not going to come through and provide, because there are places like that. They just put this bait and switch stuff up there to get your attention. These are from the places that I've seen consistently pull through. So I've anonymized these to keep everything as objective as possible. And there's a difference between pricing. You'll typically see a difference in pricing between big lenders and small lenders, big banks and small banks. That's why I've labeled them like this as such. I might even add a sixth one on here, but this is good for the moment. Now, as a point of reference, I use the 0 points. That doesn't mean it's bad to pay points. Don't even think that, because there's a lot of horrible, bad information on the internet about mortgages. Most of the videos I see on YouTube are not even put out by mortgage people. So points are not a bad thing, but I need to have a point of reference. You don't want to compare a rate that looks really low, but it's got 1.5 points in there, to a rate that's higher but has no points in there. You want to compare apples to apples always when you're looking at these rates. So I've gathered the no point rates. In fact, I'm going to highlight this later. Maybe I'll highlight it to remind folks that's what we're doing here. All right, so here we go. No points. So starting off with the big lender here, 5.5 with the 5.528 APR. Now you'll notice that the APR is just a tiny bit higher than the advertised rate. That's the advertised rate they're advertising here. This is from like 15 minutes ago, and this is the APR. And if you've seen any of my other videos, you know when the APR here is higher than the advertised rate here, that indicates there are some either lender's fees or points, or lender's fees and points added in there. The higher the APR is above this advertised rate indicates more and more fees associated with the rate. Like, for example, if this spread was like 6.00, you know, on the APR, that would indicate there are a ton of fees associated with it. But look, it's just a tiny bit hair above. And instead of being 5.500, it's 5.528. That means there's very little, maybe only a few $100 or so of cost associated with the advertised rate. Dropping down to big bank, you can see something similar, 4.99 30-year fixed with the 5.07 APR. APR is a little bit higher than the rate, not much higher. So there's some small amount of lender's fees in there. Same thing with this small lender, topping the charts with the most aggressive 30-year fixed pricing right now, 4.625 with the 4.667 APR. So you can see, you know, this might reflect about $900 or so in fees or whatever with this, somewhere around there, $1,000 or less. All right, dropping down to this brokerage, again, topping the charts at number 2, 4.875 with a 4.903 APR. And then we've got our credit union, 5.000 with the 5.040 APR. So as you can see, the APRs and the rates are really close on these. So there's either no fees or very little fees on these 30-year fixed. Why do I provide this? Well, here's why. Because if you are getting a quote, a 0 points quote, and the rate is significantly higher than these, you probably need to keep on shopping. You know, that means maybe they have some really high pricing there. You compare that pricing to pricing here shopped out by an actual mortgage guy, me. So you want to compare what you're shopping maybe to this to use this as a benchmark to let you know if you're getting a decent deal or not. Now, the other reason the company you're shopping might be a lot higher than this is because your scenario is different from the scenario that was used to price all of these rates out. Here are the factors that were used to price this scenario out: 740 credit score, no cash out loan. You can see the rest of them, etc. I actually just changed this to red so you can always know that the interest rates are based on a particular, if you want to call it, scenario. Always, everything you see advertised, they have to have a disclaimers tab. When you click on that disclaimers tab, sometimes it's labeled as disclosures, either disclaimers or disclosures. When you click on that tab, it'll take you to a page that shows what their rates are based on. It'll show you the loan amount, whether it's only occupied, etc., etc. So don't forget this. Don't just go out there and look at the rate and get happy. You have to, again, notice if it's the 0 points rate or if there's points in there. And then also if your scenario matches these things here. We call them loan level pricing adjustments, but I'm trying to give it a word that you can connect with. So anyway, if your scenario matches this scenario, your pricing is going to be very close. If it doesn't, your pricing might be off. So let me know if you have any questions. I'll probably do another report next week. This report normally comes out, like I might have mentioned, every other week, but if there are some significant changes going on, I'll go ahead and post a report, a weekly report. But reach out to me. You can call me if you have any questions. You can email me. You can send a homing pigeon. No, actually, I don't have any homing pigeon things, but you can call 6 days a week. This number actually will route directly to my extension, or you can put some comments in the comment section. I'll answer questions that way, or just go to the link in the description I'll have to the contact section of the website, and you can shoot over an email. If you just want to run some scenarios by me, like say you're shopping at a place and you're wondering if they're ripping you off or not, which most likely they're not, but they could possibly be overcharging you. You run a scenario by me, I'll be happy to check out your paperwork or answer some loan estimate questions, whatnot. Okay, so hope you have a good rest of your Monday. Since I threw you out some positive vibes at the beginning of this video, take care, and I will see you on the next one.